podcast where we put you on the map. This is Ron Costa broadcasting live in the Mappable USA studios here in Las Vegas, Nevada. And today, folks, we're going to talk about a topic near and dear to all our subscribers and listeners, real estate. We're going to talk about it from a crowdfunding perspective, as well as a little bit of Reg.A knowledge. We're going to bring that to you. And before we do that, let's introduce Vicky Hutchmala from the World Token Market. Vicky, how are you today?
I'm fabulous today, Ron. Another beautiful day in Vegas, and they've started to open some of the properties on the Strip a little tiny bit at a time, so things are looking good, things are special, and we have one of the most impressive people I've met on our podcast today, and I can't wait to talk to him.
Well, let's not wait any longer. Then let's introduce Ryan Garland. Ryan's the CEO of Paradyme Investments. Ryan, how are you doing today?
Hey, guys. Thank you so very much for asking me to be a part of this. I'm completely honored, and today is a beautiful day, kind of piggybacking off Vicky's comment there, but we're great. Thank you guys very much.
You can't go wrong living on the west coast of America, I always say. And today's day, as always, proves it. Right?
Totally true, man. I love the West Coast. Even though some people are saying, you know what, it's like to live in California, every once in a while you don't mind paying the taxes because of this weather. So
That's right. Hey, Ryan, before we get into Paradyme Investments and what you're doing real estate-wise, why don't you tell us a little bit about your background and what you've been doing before this and how you got to be part of this whole Paradyme Investments company and the CEO?
Sure. So first and foremost, I don't want to bore you guys with too in-depth, so I'll kind of stay surface here. But going into my my adulthood, if you will, I actually got into civil engineering. Learned quickly I'm not a cubicle guy. I like dealing with people, and had a lot of good friends in the mortgage business, so I transitioned into mortgage in the early 2000s. Market took a crash in 2008, got heavily involved in distressed assets, workout turnarounds. And after 2008, I stayed in the private sector. So I started raising capital with high net worth individuals, even some of the people that I grew up with, friends and family, and had stayed in the private sector. So got into private funding, private lending, fix and flip loans. I did a lot of fix and flips, and started a couple of companies, sold them off, and now I'm at where we're at now, and all we're doing is raising money.
Yeah, that's awesome.
Well,
and I guess
better than that.
Yeah, when the Jobs Act came around, you guys must have jumped on that and saw that as a great opportunity, huh?
You know, it's kind of wild because there are laws at the time where you kind of have to have an existing relationship to raise money, right, or solicit. And when that happened in 2013, we were kind of in the business already, but it really opened up the doors to now legally start soliciting, and then the Reg.A and 506C, 506, I think, yeah, Reg.DC came out. So there were some other kind of additions that we were able to go out and start raising more money. But we were definitely really excited because it didn't just happen overnight. It had to kind of, it came out, and then there were some adjustments and some remodeling of it. And then I'd say 2014, 15, it really started taking off.
Yeah, and your company pretty much deals with real estate projects, right? All right, isn't that your main focus?
Yeah, our only focus is real estate. Yeah.
Oh, all right.
So do you just invest in the projects that the real estate projects, or do you actually develop the projects as well?
So we kind of do both, believe it or not. So because of our knack to raise capital, there's times where I kind of got to a point in my career where I was like, okay, I'm tired of making everybody else money and raise money for somebody else's project. And because of what had happened in 2008 and me actually going out and fixing and flipping properties myself, I would actually continue to take capital and go out and fix and flip properties, whether it's my own money or a group of investors. We'd come together and do that. So we kind of say we're a hybrid, so from an LP-GP hybrid. So sometimes we're an operator and we'll deal with the general partnership, and then sometimes we're just a limited partner where we're lending out the money. Right now, things have kind of adjusted and changed because the dollar amounts continue to put zeros behind them. As we've kind of monetized and grown our careers or in our business, we've kind of gotten into larger projects. So when you get into larger scale commercial developments, you start doing co-development agreements, and then you go into more partnerships. And that's really what we're doing now, as well as doing some small transactions ourselves.
Well, sometimes you have to have a little bit of control over the development of the project so that you can tell your investors, give them a little bit of security that it's going to work out okay. If you just, here's the money and now go for it, you don't know what's going to happen.
You absolutely nailed it. And unfortunately, we learned the hard way. We've lent money to other people that, didn't kind of do the right thing, and weren't using the funds as they were supposed to. And so after a couple of those projects, this is a few years ago, several years ago, we just kind of got to the point where it's like, enough's enough. So you nailed it. So being able to be a bigger part of the development, having hands-on is important. And one of those ways by doing that is becoming a co-development or co-developer or co-partner, meaning we'll go in and say, hey, listen, here's your guys' what you guys are going to do. Here's your responsibility as the builder and the developer. You guys can deal with a lot of the GC side. For us, we're going to deal with all the financial side. We're going to deal with the lien releases, draw requests, fund control systems, and then we're going to deal with all the reporting, and we'll deal with all the financials. And so because we're raising the capital and using our investors to do it, it's completely important that we stay involved inside these projects the whole time. Therefore, you need to have a team and a staff to be able to do that, right? So when you become a co-builder or co-developer, what you typically do for a group like ours is we would split the developer fee, or also put a project management fee in there, and then we hire a team, which we already have the team, but you would typically bring in a team that would work directly for our company, is getting paid as a project manager through the construction budget to watch over that project and report back to us as a firm to make sure that the project's going well. So when you go into the co-development agreement, you're able to create passive income to keep the eyes on the deal, very close and tight. So when you do that over multiple transactions, it really allows us to scale, watch what's going on, understand what material costs are really going to be, turn times, and so on and so forth. So we have that on every one of our projects moving forward.
Yeah, that's important, because the stronger the relationship you build with the people you work with on each project, then the more success you have in the future, and the more you create the anticipation of your investors to want to be involved. And the better the job does, the better your property or your managers, development managers do for you, because they see future income.
Absolutely. And so some of these Totally. And some of these projects, are 3-5 year developments, some of them up to 10 years. Right. So, it's a lot of job security for an individual that come on with our company. So that's huge, number one, right? So we have less turnover as a company. And so, and that allows people to really sink their heels in and become prideful in what it is they do. So we have a very beautiful culture here at the company. But to add, one of the other things that we do to provide the service to our investors are, we have a back-end software, like where people use CrowdStreet and stuff of that nature. Because we're not a CrowdStreet structure, we actually use a software called Juniper Square. And Juniper Square was built and designed around a private equity firm, and it's all for real estate. So it creates this transparency for our investors to log on from any given time. They actually have an app. We have an app where our investors can download the app to their phone. They can log on to their profile, if you will. They can look at all of the developments. They can see when they're going to receive dividends. They can look at all of if they say they invest into one or multiple projects, what their overall portfolio looks like, when they're going to get payouts and stuff of that nature. It's really a pretty cool thing. And then we can issue K1s and all the tax stuff that they've needed, all the reporting they have access to. So it's a really cool thing to kind of allow investors to feel more comfortable to get involved. But to add to that, one thing I wanted to share with you guys too from the transparency side is we actually put construction site cameras through a company called iBeam on every one of our projects. And that is linked to our app. So you can actually click on the app and look at real time, and even have a time lapse to look at how the project's going from anywhere in the world. So I have investors abroad where you can literally look at your development and say, okay, I'm going to look at my project timeline. I'm going to have lumber delivered on this time. I'm going to have, we should be, fully framed up by this date, so on and so forth. So people can actually look at a camera, even go back during time and see how the project's transpiring. So it's a really cool thing, and it really allows our investors to feel more confident and comfortable where their money is being spent and how their developments are doing.
Wow, that's quite that's quite innovative. That's impressive.
With technology the way it is today, I'm surprised not everyone's doing it. That is such an obvious and great value added to a project. It's amazing, and it's so simple
absolutely.
too. Yeah,
absolutely. And that's just from like an investor reporting relationship standpoint. I mean, we get so innovative all the way even from the co-development side. We're very heavy in ESG. We love building material that's good for the environment. We love getting, there's a company called Delos Wellness that has circadian rhythm lighting, hospital-grade air filtration systems, and all kinds of stuff. So you can put all of these products inside these spaces, no matter what it is, office, industrial, apartments, single-family homes, whatever. And now you're bringing a health and wellness component to the development, which at the end of the day, when you're looking at generational trends, millennials, Gen X's, even baby boomers love that new innovative health and wellness component to it. So you're really bringing a really positive aspect as well to your occupant, which ultimately will turn out to make your investment look better, right? And without any big additional cost. And so we're really innovative from cradle to grave on every one of our developments. So it's a really cool thing that we have a lot of good feedback from our investors for that.
Yeah, you mentioned a while back in the podcast that you guys were working on larger scale developments. Is that the asset classes that you like, multifamily, industrial, or do you have a specific one that you really kind of focus on?
It's really kind of crazy. So first and foremost, I look at anything from a risk standpoint, right? I would have to say that probably multifamily and single family for rent product that's financially modeled like multifamily is probably my favorite asset class. And what I mean by that is, like, let's say, for example, instead of a multifamily apartment project, imagine if you had a community of single family homes, little smaller homes, but you had them track mapped. So if something were to happen like this in the marketplace, you could just sell them off one at a time instead of having to sell the whole entire, complex, right? So now you have workforce housing, affordable housing, and they're track mapped like single family. So if you ever needed to sell 5, 10 of them, 20 of them, 100 of them, you can, and then create some cash flow or liquidity to pay your investors back. So in this time, let's say some of these apartment projects where they're having a hard time, you can just go to some of those occupants and say, hey, would you rather buy these homes and buy the home that you live in? And then you can get some of that liquidity back and pay off your investors and move on. Or you can even financially model like you do when you build tract homes. So for example, when you build tract homes, you usually build 10, 15, 20 at a time. You may have, let's say per phase, you may have 200 homes you want to build, but you build them in phases. You could do the same thing where you're building in phases, and by the time you're getting close to the last phase, you've made enough money to build them all cash. Therefore, the last phase or so, we may be able to hold in our own portfolio as rentals, and they're paid off, and all our investors have already made their money, and we've made our money, and we'll move on. But we get to keep those last phase in our portfolio for rentals for ourselves. So there's all kinds of things that you can do to create risk or to try to help eliminate risk. So I would say, and I'm sorry to go on a tangent, but I'd say probably multifamily, single family, I really, really love. Affordable housing, I love completely, especially if you think about what's going on today, right? I mean, with people losing jobs, and the affordability is always important. And I would also say industrial. I definitely, just the wave of the future, I think, is industrial.
Well, especially with this whole coronavirus and everything, I think industrial is a big time winner. And as well as like you said, I don't know. Do you do anything in opportunity zones as well?
We do. I love opportunity zones. What an amazing program. We haven't had the opportunity to dive into a QOZ product. We've been engaged in several multifamily projects. In fact, we actually had 3 LOIs out to move forward right before this pandemic, but because of this whole thing, we've had to stop kind of dead in our tracks. Because they were actually ground-up construction projects. They weren't any value-add ones, so it's a little bit more in-depth. But I love QOZ.
Interesting.
Does Paradyme have an opportunity zone fund that you invest in opportunity zones, or do you just invest in the zone regardless?
No, so we would actually, so every project, for the most part, I'll kind of answer that question in 2 different ways. So most of the time we open up one fund per project, so what we call an SPV, special purpose vehicle. So we'd open up a QOZ fund for that specific project. We do that on every one of our projects now. However, our Reg.A offering, which I know you guys want to go down that road here shortly, is actually a portfolio scenario where we have multiple projects under one fund. But we, specifically for the QOZ, we'd open up one fund for that specific project. Because of the size of our firm and how we operate and through the crowdfunding, we don't really go out and get capital to go into a pool, right? It's not a blind pool. So every project we do, we put up on the platform, and then people see that deal, right? Our investors see that specific project and then invest into that project. So for us to market, to say, hey, would you like to put all your money into a pool, it doesn't really fit well. It makes more sense to have a project on the platform. The investor gets to know more about that project, and then they would invest directly into that project. So having an SPV is really the best way for us to operate.
Yeah, so these investors, when they come to the website, they're investing in a particular project. They're not investing in, let's say, a Reg.A or Paradyme as a top-level investment. You're talking about each specific property or each specific project that they can invest in, right?
For the most part, that's on some other scale. So the Reg.A, so let's hone this down.
Yeah, let's talk about the Reg.A.
though. Yeah, so on the Reg.A, though, so we do have 506Cs, and so some of the projects that you've seen on our platform now are under the 506C model. The Reg.A model, we do have projects in that particular fund. It's not a blind investment, so I just want to make that clear. But it is all under one model, financially modeled project or fund, meaning when you put your money onto one specific deal, your money is going onto that deal, but it is going to be based off of what the entire portfolio of all of the other projects that we have in place, how that's how it's going to actually turn out. So, for example, if we know we're going to go get some multifamily over here, and that's going to give us a 20% IRR, and then we're going to go get this value-add industrial deal over here, that's going to be a 14% IRR. And let's just say once we look at all the assets that we want to put into the portfolio, totaling $50 million, at the end of the term, what are all those projects going to look like, right? Which will give us an average between them all. So what happens is when our investors go and invest into one specific project that is in a Reg.A, they're really diversifying their capital on all of those projects that are in the portfolio, and they're gonna make a decision based off of what the return is based off the portfolio. So they're going to see the deal. They're going to invest into the Reg.A, which is going to close that specific transaction in which they had seen, but it does go across the portfolio of projects. So a lot of our investors actually like that because of the diversification and the fact that they're not putting all their eggs on just one basket too.
Right. Are all these properties, though, are they all in the state of California, or are they around the nation?
We're in 11 states, and what I call my most favorite, all my favorite states. But it's more nationwide product.
Okay, so this was a tier 2 that you did, or a tier 1 Reg.A?
It is a tier 2, so we had to go through the public sector, if you will.
Okay, all right. And again, with the Reg.A, you're allowed to market this and take investor money, accredited and non-accredited people. Is that right?
That is correct. Yep, and our minimum investment's $20,000.
Okay, but for what you said before, you're also doing the 506s. Those are basic private placement ones, which have to be accredited investors, right?
That is correct.
All right. Do you make that distinction on the website?
Yes, absolutely we do. Yeah, and our software too, as people go into the software. So first and foremost, the marketing material is always going to say either non-accredited, accredited, 506C, under the Reg.A, whatever the case may be. So it is right there, cut and paste for the investor. But also when you log in and create your profile, once you've seen, let's just say however way I've marketed that project, when an investor or potential investor clicks on it, it's going to go to a platform which is going to spell it out saying, listen, this project is only for accredited. Are you accredited? So now they self-accreditate, and then our software also takes them to a third-party accreditation service and has them go through that as well. So that way we actually have a third-party accreditation write-up.
Okay, that's interesting. That's really cool. I like how that's done. But when an investor comes to the website and they decide that they want to maybe get involved in some of your projects and they have to go through this accreditation process, do they have to go through the accreditation process on every single deal that they're interested in, or is there a top-level accreditation process across all of Paradyme?
No, good question. So, no, it'll be one-time accreditation process across all of Paradyme.
That's really easy. That's great. Yeah,
it's much more simple.
Right.
So, Ryan, is Nevada one of your favorite states, and you have projects here?
I don't have any projects there, but I do have it listed. Yeah, we do. We and especially now, I'm definitely going to keep my eyes open over there. You know, we're pretty bullish. I think a lot of institutional grade investors are very shy of Las Vegas. I'm not. I feel that some of our projects, though, are not too big. They're small enough to withstand any type of, pandemics or 2008, kind of recessions. But,
right.
Like, for example, all the projects that we have in our portfolio right now, we're not having a problem with. We've re-underwritten them since the pandemic, and everything that we've seen is still showing, well. So it's the conservative nature, I think, at the same time of being bullish and being careful of the projects that we're getting involved in, and also watching really who we're getting into bed with, right? And the length of time that we're really saying, okay, we're going to lease it up, it's going to become stable by this month. We don't look at it we were a lot more conservative on our future evaluations, our lease up periods, our cost for construction. We kind of do worst case scenario across all levels first, expecting that we know development and construction never works out the way you planned it to from the beginning. So when you just kind of look at everything as worst case scenario, then it typically will actually show better because you've already just planned for the worst. So that's really how we underwrite these projects. And every project that we have, every one of our developers, for example, just on one of our developers, he's been in the business since the 70s. He's developed almost every project here in Southwest Riverside County, Temecula Valley. He's got a $165 million winery right now going up. He's built, maybe 1,000 homes. He's done tons of multifamily. Put it this way, he's never filed bankruptcy. He's been able to get through the 90s, 2008, and right now he's shining well. Every sponsor we get into bed with, it has that type of track record too. They have some additional liquidity in the bank. So these things aren't going to affect us like a lot of the negative press that you see other builders going through. So there's a lot of moving pieces to what we do, but that's how conservative we are. We just won't do a deal unless we just know we can get through it, at least hope for it, without any problem.
Yeah, well, taking it from a worst case scenario, like you said, is a really good way to do it, because then, I was on your website the other day over at ParadymeInvestments.com, and you have a link there for an ebook to download. So I did that. I downloaded the ebook. And I'm really impressed with the returns that you guys are providing to your clients. And I guess the way you do that is you look at a worst-case scenario and you make it better. And it was a really interesting read, I got to tell you.
Thank you. I actually I've gotten a lot of good feedback on that. The funny thing is, real quick story. So we wrote that. I actually wrote that book. I actually finished the book right before the pandemic. And it was funny because it was so geared in one direction. It was really hospitality driven and right. And then the pandemic hit, and I'm like, hey, don't publish yet. Don't go live with this thing,
Right.
So I waited a couple of months, and I said, what would be really smart is to just kind of, because we have an actual in-house data scientist, so we don't really rely on other publications, knowing that mostly other writers have kind of their own agendas. So we really kind of go on our own stuff. We have an in-house mortgage company, real estate company. I have some of my best friends own escrow companies. So we're kind of calling them going, hey, what's really going on the streets? What's really trading right now? What are you guys seeing? What's the negotiations? What's really going on? And so I'm using that as one example, but, we really want to do our own data. So the point is that when we kind of follow our own data and we start realizing what's going on with this pandemic from a political side along with health side all the way down to the real estate side, we kind of go, okay, we now know the path we need to stay down, and we're going to stay here. However, I want to write an ebook to let all of our existing clients know that we have our thumb on the pulse and that we're not putting our head in the sand. We're going to be bullish. We're going to take advantage of this market. We're going to do an impact kind of structure. So we're opening up an impact fund right now. So not a distressed asset fund, an impact fund where we're going to get in there and actually help some business owners that have a real estate portfolio kind of get back on their feet, right? You probably read that in the ebook. So the point is, we wanted to get involved as deep as we can, write something and rewrite a couple of chapters and issue it to everybody saying, look, we understand what's going on and we're going to shift as needed, hence the name Paradyme, right? We're going to shift right now, and we're going to try to get into some asset classes that are going to protect the existing investors and the existing transactions in the portfolio. So that's what the point was for that ebook.
Well, and truly successful entrepreneurs always will find the opportunity and the bright side of any crisis or catastrophe and turn it around and not get stuck in it, but lift out and find a better way.
Yeah, and being patient, I think, is really big. Knowing, being through it has also helped a lot. In 2008, we went through it, and so I think you nailed it. Just being, again, not too aggressive, but a little bullish, and just being just really just letting the chips fall, but not put your head in the sand and get into depression like a lot of other people I know of, unfortunately.
Well, yeah, and build a better mousetrap. But I would say that every project, whatever you do, you have to. The first step is the analyticals and the demographics to make sure that what project you're going to do is going to fit in that location based on all of the ancillary things that are relative to the project. And if you don't have the data, precisely the data that you can rely on because you've created it, then you can't go forward. Or you go forward blind and you don't end up successful.
You nailed it. And I think a lot of people separate, they don't understand how to separate data, business, and emotions, because investing, I don't care which way you look at it, is very emotional. But if you really get down to it, and over time you're able to get rid of that, shut it off, right, like a light switch as far as the emotions, and you really drill down into the data and you pressure test it and you talk to other people that maybe you look up to in the business and other people that have been aggressive and active in this business or in this location, you really do your homework, you can really get a good beat on what to expect when you go into the investment. And like, all the big players and big investors and hedge fund managers and so on and so forth will say, you make money during your acquisition. You don't make money at the end.
Right.
Yeah, very true. Very true.
Mm-hmm.
A couple other things, Ron. Do you guys deal in raw land investments too? Do you develop from the ground up?
Because of my background on the civil engineering side, we do, but we're very picky on what it is. Basically, we just won't market it. We have, some of our existing builder-developer relationships will come to us, and we'll take a hard look at it. But we really don't want to get involved into it. If we do, we try to take it a little bit closer to the hip, because that's where most of the risk is in the acquisition and entitlement, right? So
yeah.
We really, the cool thing is we actually have the former president, or actually former mayor of the local city, Marietta, and also ran the local EDCs for the 5 local cities here. He's actually the president of our company. So we brought in that private-public kind of relations kind of department, if you will, so that way he can go straight to the city, deal with the city managers, and deal with the mayors and say, hey, would this project be desirable? Is it in line with what the city's needs and desires are as well? Where a lot of builders, let's be honest, and respectfully, they'll look at a raw piece of land and be like, I can build this here, I can build a gas station, I can do this. Yeah, but does it align with the city? Right? And does this builder have a good relationship with the city? How long has that builder been here, right?
Yeah, well, Vicki, you talk about that all the time.
Important.
Yeah, absolutely. Yes.
So we have him, because he speaks the language, get involved and say, hey, guys, this is who we are, this is what we're doing. We're going to look at this as a partnership. We're going to actually be the ones putting up the capital. So we want to make sure we're not going to get any pushback from the city. What can you guys do? And also, because of the relationship too, a lot of times we can kind of get things through approval, or kind of get some little things that we need to know, but also the development agreements too with the city are huge. We're getting projects right now where the city wants and may possibly donate land to us for $1 for us to go in and build some workforce housing for some of these local cities. So, think about that. We're basically getting land for free, right? So there's all of these things that we have kind of in place that we do to help mitigate risk for our investors, but also, just really make sure that we're getting involved and we really know everything about that project before we get involved. So to answer your question on the land side, we do, but we're very, very picky on that for sure.
Yeah.
Well, the second step after you do the analyticals and the demographics and that for your project, you have to have a relationship with the entity, the city, the county, wherever your project is, to help you through the process, to streamline the permitting, to streamline the zoning, the codes, all of that. That's like the second step. And if you don't have that relationship, it makes it much more difficult. And with the reputation, then that relationship is more valuable. Oh, here comes Paradyme. We know their past experience. We know because we've dealt with them. So now we can rubber stamp their future projects because we know how they work in the past. And that's vital right after the analyticals and the demographics.
You literally nailed it. Put a period at the end of that. Yeah.
Period and exclamation point.
Yeah,
that's right.
Yep.
Hey, Ryan, one more thing. When you guys are talking about properties and all these things that you're looking at, do you guys work with brokers and agents on this, or the developers, or do you straight to the owner, or a mixture of everything, or what?
Well, I mean, our relationships really have, well, it's kind of both, to be honest with you. I mean, I came from the broker world, right? So I get I still have a lot of brokers sending me deals. And I think their relationships with their builders are really, they want to keep close to the hip too. So we really spend some energy on the front end, looking at the executive summaries, doing a little pressure testing on, some numbers and their pro formas if they're pitching it to us. And if we feel like it's a solid project, we'll send out an engagement and then get right to the sponsor. We will obviously bring, look at deals that brokers will bring to us, but just out of the amount of moving pieces that's involved in every project, and because we are going to do a co-development, we automatically need to speak to the builder and the developer, the sponsor. So, but we look at deals from any source that brings them to us. We're totally open for. I mean, you'd be surprised. I have my wife's hairstylist's dad is a builder.
Yeah, right.
So he wanted to bring us a deal,
who you're going to meet.
Yeah, I mean, I've had it all, So, but yeah, we look at pretty much anything from everybody, and then whoever brings it to us, as long as compliance calls for it, we make sure everyone's compensated according to what standard is in the market, and we just we make sure everyone's taken care of, because there's usually enough meat on the bone on these projects when we get involved.
Yeah, and speaking of the compliance aspect of that too, let's go back to the Reg.A really quickly before we close this out. How long did it take you to go through that whole Reg.A process from start to finish?
You shouldn't ask me that question.
Okay.
I've revised mine like 3 different times though, and one of them was just recently because of the pandemic. So, I would say realistically, if no one's actually opened up a Reg.A Tier 2 Plus before, and because of you have to pass comments with the SEC and you need to have the right attorney involved and so on and so forth, along with making sure most of the problem lies in, okay, you have a really strong business model and you have a great idea, but I promise you it's going to adjust. Like you're going to think, okay, but 3-4 months later, after you go through some questions and answers and you're drawing down on the data going, okay, I'm spending a lot of money getting this thing launched and building out the whole infrastructure for the crowdfunding component. That's where a lot of your cost is mostly. But, once you kind of get all that in place, a lot of times you're going to make your final adjustments right at the end before you upload it. And to Edgar, as far as go right to the SEC. And so I would say realistically it took us anywhere between 8 months to a year to really nail it down. So it's not something that happens quickly. It really isn't.
That sounds about right.
A 506C, I mean, if you know what you're doing, it's one deal specific. Because of the Reg.A, the nature of the Reg.A is more of a portfolio. It's a lot more. There's a lot more to it. I mean, I'd say it's 50 things more to it than one specific 506C on one specific project. So there's just a lot more things you have to really kind of factor in. And if you're going to be more diverse too in asset classes, that's all going to be different too. How are you going to operate it? Are you going to offload it to a project management company? Are you going to deal with the project management in-house? How are you going to market it? I mean, there's so many things to make sure that a portfolio is going to operate well on a Reg.A. It just takes a little bit more time, and that's probably where most of the time comes in as far as well spent. So 8 to 12 months, I'd say, cradle to grave, you could have it done.
Yeah, a lot of issuers will talk to me and say that, I think I can get my Reg.A done in 3 months. And that's when I use your line. I use your line all the time. Plan for the worst. Plan for the worst. Trust me.
Yeah, you really do. Yeah, you really do. And you know what? We learned kind of the hard way. We thought we were going to have it done in 5-6 months, and that just wasn't the case. But we probably could have rushed it through. But I know me. I'm like I was saying earlier. I'm a little more conservative. I'd rather be. Like every time I make a decision, I go, okay, I'm gonna sleep on it, right, and then make that final decision the next day. So I never just make a decision on the fly like that. So there was a lot of those kind of situations buttoning up the Reg.A at the end. So I didn't, I did a lot of sleeping on it.
Yeah.
Well, in leadership, with leadership, good leadership, you have to get the idea, you have to contemplate it, you have to anticipate what might happen, then you have to take it out 3 or 4 ripples, then you have to have a plan A and a plan B, and you have to know how to adapt to everything that comes up that's not going according to plan. And if you can't do all of that in every time you do a project, every time you have an idea, you're not going to be successful, because if you haven't anticipated the failure, you can't build the success.
Correct. Yep, you nailed it.
Okay, well, Ryan, last question. Last question on this. When an investor gets involved in one of these deals with you, what's the time frame for the investment most likely? I mean, can you get out of it if you want, or who makes the decision as to when the deal is sold, or how does that whole thing work for an investor to look at?
Under the Reg.A, there's a lockup period of 5 years, so we're leaving all the investors in for 5. If we get a phone call from someone and unfortunately they had a loved one pass away and they're just in need of the capital, then we have an ability to pay them off basically 25% of what their investment was per quarter. So you have to wait until you get to year 3 before that happens. And so then there's thresholds. Let's say, for example, you call me at year 2. And you want to try to get your original principal back, you're going to have to take a discount on that money. And the reason for that is because a lot of the projects that were going in the first year or 2 have not been able to turn a profit yet. So I have to somehow replace that capital that you're asking for back for somebody else's capital, because we haven't generated enough income yet to show the portfolio looking positive, right, or the fund to look positive, as an example. Mm-hmm. So what I'm having to do is now using the replacement of the original capital to a new investor, giving a kind of a bonus for them to get involved and replace that capital. So there's little thresholds throughout the time where, if you ask for it too soon, then you're going to have to take a haircut. If you ask for it at certain periods, then you can get your original principal back. If you go a little bit longer and you're looking for something, you can still get at least your preferred return back. So there's like these little thresholds there. But normally it's 25% of your initial capital quarterly. So if you invest $100,000, just expect, let's say you get to year 3, you can get your whole $100,000 back at the end of year 3, going into year 4 in those 12-month period from the original time you requested that capital back.
Yeah, it makes sense. It's reasonable. Yeah, absolutely.
Ryan, do you anticipate ever using blockchain for your investors?
Absolutely, yeah. I think that's going to be another huge wave of the future, especially with foreign investments. Because the amount of capital where people want to make – so first and foremost, I'll tell you this. I travel all over the world. I don't know if you've seen any of my YouTube videos. I mean, we host events in London. We host events, and we were supposed to be in Spain last month, also in Monaco for the yacht show. We were supposed to be in Monaco. We were in Monaco for last year. We were in Dubai in February, right before this whole thing hit, and we actually host big events with multi-millionaires and so on and so forth. And when you get to understand where their heads are and where these investors really want to place money, they love U.S. real estate. All of them do. As soon as they hear I'm from the U.S., and then they hear I'm from Southern California, they think I'm a celebrity. But they all want to get in through blockchain because of the amount of how hard it is to place capital. It's really, really difficult. Now, of course, there's going to have to be a vetting process, making sure that the money's clean and so on and so forth. And that's really kind of, I think, the biggest problem. But the simple part would be is someone could just say, cool, I love that $100,000 investment over there with Paradyme. I can just blockchain my capital right over, and I don't have to worry about all this movement. I don't have to have brick and mortar. So I can see that being a really big movement, especially since what's gone on during this pandemic. Right now, I've been listening to I got a fund manager out of London. I've been talking to him, and we're really thinking EB5 may come back. Now, my securities attorney, his name is Steve Anapol, one of the most. If you look him up, he's the number one EB5 attorney in the country. And him and I have been talking about, what are you thinking about EB5? He goes, I think it's going to come back. It's a little too soon. But Trump if Trump stays in office, he's a real estate guy. How is he going to be able to get our economy fired back up to create jobs? That's what EB5 is, right? If you take an EB5 capital, it has to the development has to have X amount of jobs. So I can see this really kind of coming back. Well, in China right now, China is really a lot of citizens in China are going to like Poland and spending $60,000 US, if you will, just to get their citizenship in Poland. So we're thinking that you're going to see a lot of individuals, even from China and India, especially trying to get into the U.S. So we know there's going to be a lot of capital trying to come in. So ultimately what I'm saying is I think blockchain is going to be really, really big. And I can see after this whole pandemic that becoming a really, really big thing, people wanting to place money and get their money parked somewhere else, which the U.S. typically is very safe for real estate.
Yeah, interesting take on that. There's a lot of EB5 money in Las Vegas, by the way. A lot of that stuff, we saw a lot of it here, and I believe you had 2 years to make those 10 jobs or something like that on the EB5 program.
Yeah, I don't know exactly the specs on it. We haven't done EB5 before. I mean, I've dabbled in it, but I haven't gotten involved. But it depends. For every million, you have to have 10 jobs, something of that nature.
Yeah, we could.
But I think there's. So it also depends on the size of the project and how much money you're actually getting from EB5 too. Some big regional centers, like a big live, work, play, a lot of retail, stuff like that. I think that changes depending on once you get to a certain head count and jobs, and it changes a little bit, but I'm not quite sure.
Yeah. Well, we could do a whole podcast on not only EB5, but on the benefits of living in Temecula, where you are, where everyone thinks you're a movie star. Right?
Yeah. Well, some people don't even know where Temecula is. When you come here, I think everyone just drinks so much wine they forgot they were here.
But anyway, Ryan, listen, if there's investors or developers, whoever's listening to this podcast right now, I'm sure they want to get a hold of you after all this information. Now, what's the best way to contact you? Email, phone, a website? What do you got?
I tell everybody either way. I mean, you can reach out right to our website and see my email right there. The website's paradymeinvestments.com, but we spell Paradyme a little differently. It's Paradyme, investments.com. And then you can always call the office, 901-5304. And then my email, which is even easier, so it's ryan@paradymecompanies.com. That's usually the best way to reach me.
Yeah, and Vicki, I think that Ryan should have a presence here in Las Vegas, don't you?
Oh, absolutely, because this is a special place for Ryan. And, Ryan, you could come over with Elon Musk and Tesla.
There you go.
Yeah, I know. He's wasn't he up in Sparks, Nevada? I think
he has
a
location here, but he's bringing his California operation to Nevada and Texas.
That's what I heard. I don't blame him.
Well,
when you have that many people, and he's really being affected by. I don't want to go into the political side, but he's really being affected. Yeah.
Yeah.
Poor guy.
Well, who knows? Maybe he's listening to this podcast.
He is. He is.
All right. Well, listen, Ryan. I know, like I said, you're really busy and you're doing all these deals. I really appreciate you taking the time to talk to us and our audience. And this was really interesting stuff. I'm really psyched about this. I feel like going out and investing in real estate again right now. So you did a great job. Yeah.
Well, thank you, man. I appreciate it. I just eat, breathe, and sleep it. And my uncle, my mentor, had always told me if you want to be successful, you have to love what you do.
That's right.
And I've kind of converted from not just, loving what I do and look at it from a success standpoint. I look at it as a whole. If I have a bunch of investors because the reality is the investors see a deal in its numbers, right? But they have to fall in love with me and my company, period. And when you get to know every individual in my company and who they are, and, using this as an example, the president of my company, he lost his son. His name was Brian. He was 1 year older than me. When he turned 21. And so the president of my company and I totally just hit it off. Mm-hmm. And, he looks at me like a son, that had passed. And so we have that in-depth, meaningful relationships with every individual here in our office. When people hear about family office networks, I understand that. But when you talk about a real family office-oriented company, we are that. No, we don't have turnover. We have really amazing people here. And the success chair that I sit in really depends on how everybody is doing, and that's really the bottom line. you know.
Well, Ron, you know how I like to always have the last word here, and I'm going to say this. We met Ryan at the OZ Expo that was here in Vegas a year ago, and I watched this table fill up with a bunch of people, and they were all chatting and what have you. And then Ryan walked in, and he sat down, and all of a sudden the atmosphere in around that table changed, and there was such a sense of loyalty and excitement and pride when Ryan came in that it was palpable. And of the things that we did over that two-day expo, the people that we met, that one time is permanently in my brain to see how much pride these team members had in their leader. And I don't think, Ryan, that you could not be successful because your team members would not allow it to happen because they have so much passion and pride in you. And I got to say, it was one of the most impressive things I've seen.
Well, thank you. That means a lot to me. And I think it actually means a lot to me because I don't think a lot of people ever really get a chance to see that side of the company and what we try to do. You know, I mean, my family and I, we've literally pledged everything we can to grow the company. So I think it's very easy to gain people's loyalty when they see the amount of sacrifice that we've put in. And I think it's really just been that transparent, you know, behind these walls or in these four doors, or, you know, behind the doors, if you will. And, you know, if you come into my office, the very first, you know, book that you'll see that I've read and have read and that I have up is called Leaders Eat Last. And I really do believe in that model. And, you know, I'm in a chair that every decision we make can really affect a lot of people and their family. And so we take that very seriously here, and so does everybody else. So we count our blessings every day. And that's kind of where the bullish aspect of our business model comes in. We're not here to, you know, we're here to make a living, but there's a lot of people's retirement money also involved here. And so we really take it serious. So I really appreciate that, those really, really kind words. Thank you very much.
Well, it was absolutely true. I mean, absolutely true.
It. And Ryan Garland, thank you again for being a guest on the show. Vicki, thanks for co-hosting it. You're listening to the Mappable USA podcast on MappableUSA.com. Go to the website, scroll down on the site. You'll see all our syndication sources. Pick the one you like best so you never miss another Mappable episode. If you like what you heard today, send us an email, info@MappableUSA.com. Tell us we're doing great, or comment on the page that you're reading this and looking at this right now on the site. And lastly, if you want to be a guest on the show like Ryan was today, there's a guest tab on the top of the site. Fill that out. We'll see what you can do about getting you on the show. So once again, everyone, thank you for your support. Thanks for listening. We'll be at you next week with another Mappable USA podcast. Have a great week, everyone.